Hey guys, what's up? Let me try to share this with others. So this is the whole one big deal we have with counter trend trading. At times you get stressed up, you get whatsoever. But if you were trading pro trend, nothing actually bothers you because you know exactly what you're doing. So this is the trade setup we had since yesterday, London session. You see, it's just been manipulating, playing over people's emotions. Yo, my brother, all the way from South Africa. Good morning, good morning, good morning. Nice to have you here, man. It's always a pleasure to have you, bro. Thank you very much for joining. So, actually, today South Africans are leading the stage on this live stream, guys. Whoa, hi, Philip. Nice to have you all the way from Australia, man. This is amazing. So we have Australia, we have South Africa winning, killing it this morning. So, like I was saying, this is the problem we have with counter trend trading. You see, yesterday I was a little stressed out about this trade, and I already concluded that this is a loss. Yeah, because of the way price has been playing. Yeah, let's get more people, guys. Let's share, let's share, let's share. Let's keep it coming. Thank you very much, my brother. So, to be honest with you, let me tell you what I'm expecting on this pair. Okay, this is what I'm expecting on GBP USD. We did this analysis sometime. Um, I think it was early this week. Yes, that was on Monday. I told you this is exactly what I'm looking at. Okay, this is exactly what I'm looking at on this pair. I'm hoping that price should pull back up somewhere around here. Where you see the entry is not the actual spot because I'm not putting a pending order. Okay, so price might play, but I'm expecting price to pull back up to this zone. If price can pull up to this zone, that's where we'll be having a, let me just go to a chart where I can clean everything and we walk freely, guys. So for those joining us for the very first time, you are highly welcome. Okay, so we do this always. If you don't know, we are always live here, making trading easy for everyone. Okay, so if this is your first time, show some love by subscribing. Subscribe to the channel and let's get it going. Let's keep it on. Okay, so we are currently looking at GBP USD. Let me try to take off some of the noise on the chart so that you can see clearly. So the reason why you see all these lines is simple. We trade key level. We trade key level. So with key levels, we try to make trading very, very easy by understanding psychological levels on the charts. Okay, understanding psychological levels on the chart. And once you master psychological levels, bro, trading becomes so easy for you because you know that when price gets to this level, there is a higher probability for price to react. And because of that, you simply know what you're expecting to see before taking action. Okay, so I'll also take this off. Now, what do we do? After taking off all these levels, we'll just mark out a little box around each level. Because there are times when price will get to the level, close to the level, and react while you are waiting for price to get straight to the or close to the zone and react while you're waiting for price to go straight to the level. So here are the two levels we'll be looking at today. I'll add the mid level shortly. And you watch out the way price has been reacting around these levels. Okay. Even if I go to the weekly, monthly, you will see the same reaction. Yo, my G Phillips, nice to have you, man. Thanks very much for the support. So before we proceed, I want you to look at these levels I've just marked out. You see, we marked out these levels from here. But now just go back. You realize that in history, these levels have always held price. You see, these levels have always held price. When price gets to this level, what happened? It reacted, 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 came close, reacted, came there, break, and came back, reacted, reacted. Always react, react. Okay? So we know this is a psychological level. 1.32,000 is a psychological level on these charts. Thanks very much for those joining, and especially those who are joining us for the very first time. Show some love, guys. Subscribe to the channel. On this channel, we share trading gems. Okay, we break down the charts every day. So if you think forex is your thing and you want to take forex serious, this is the perfect space for you. Don't miss out. Subscribe to this channel. I have powerful videos here that can take you from a complete beginner to profitability if you watch and apply with proper risk management. I think one of these days I'll be dropping a powerful risk management video because so many people actually understand price action. They know where to buy, where to sell, but they don't know how to manage their risk properly. So I'm going to be teaching you guys on a video how to manage your risk. But today is our usual daily breakdown. Okay, so we currently have GBP USD in front of us, and we've marked out the two major key levels. Now we have to look for a mid level. Yeah, definitely. If you look at it closely, the next cycle level, the closest, is the one down. But there is one thing about price action. You see, like right here, let's look at what happened. The last time price break through the psychological level was here. Let me make this tool a little bigger so that when drawing, everyone can see. So the last time price break through the psychological level was here. You see, right? When price break, what happened? Price had to pull back before creating the next move. Did it go straight to the next level? No, it stopped. It pulled back. Then finally went to the psychological level. And it did not even touch it. It still did what? Pulled back. Now we had a clean touch of the psychological level. That's why, for the fact that price is here, it's not a guarantee that price is going straight to this level. So as a swing trader, we have this understanding, or I have this understanding. I know that, yes, for price to come here, we are not just expecting what happened here to repeat here. No, this is a rare case where price will just go straight. Yes, it's a rare case. Price doesn't just move straight like this, but at least we had a little pullback, just that we had a gap to the upside, and that's why it went so easy. All right, we have someone new, James Scott Pell. Trade Hydra Dragon, Centrate, James Scott. Okay. You're welcome, James. Nice to have you here. It's like it's your first time joining us. So if you're not subscribed to the channel, show some love by subscribing and tell us exactly where you're streaming from. So, hi, James. Where are you streaming from? You know, if you spam a lot, if you repeat the same message multiple times, know that you automatically be blocked. So that's it. All right, we keep it going, guys. So at this point, what are we expecting on this chart or on this pair? We are looking forward to see price do something like this. Okay, a pullback. Then, excuse me. So we're expecting to have a pullback. Then it might not just go straight. Okay. The same thing that happened here can happen here. Gradual process. Okay. Gradual process. But we are hoping to see price pull back a little before we continue the sales. So that's what we have on GBP USD. And that's why we have no pressure. No pressure. No pressure. You see, there is something that happened on the daily. Let's just go back to the daily. Most of my students already understand this. Most of my students understand this. You see, we had a daily change of character here when this pullback was created, because this is a daily pullback. But before that pullback, we had a change of character. And after that change of character, this is the highest point price got to. Let's just take all this as one leg. And now you see an engulfing candlestick has formed from between 78.6% retracement to 50% retracement levels. That's to tell you, under normal circumstances, though the market can actually do something crazy, the market can go against us, but 80% of the times when you see an engulfing candlestick like this, you see, this is the last engulfing we had around a key level. And what happened? It continued all the way up. It gave you all that. Okay. So when you have an engulfing candlestick like this, it tells you something powerful is about to happen. This engulfing candlestick has appeared around a key level 1.83 thousand. Good. Now, price is finding it even difficult. The engulfing, the way it formed is so sweet, because the first thing that happened, let me expand it so that you can see it perfectly. The first thing that happened was price took out the low, the low of the previous daily candle. You see that? That's to tell you it has swept the liquidity below the zone before taking out the highs and closed above the highs, telling you at this point, buyers are in charge. Buyers are ready to take action, because we swept out the liquidity below the zone, like every stop loss that was here, because some people entered so fast and maybe placed their stop loss directly under this candlestick. The stop losses were swept off, and some people placed pending orders around here. They were swept off, and price pulled back to 1.33 thousand. That's a psychological level. For those who still find it difficult to understand what these psychological levels are or what these key levels are, these are zones, highly liquid zones, that banks and institutions will always want price to react from. Because imagine you trying to buy a car for $150,000 and you hear that the price is 152,317. You understand? Those kind of prices, they always want round figures. Okay, so that's why you see when price gets to a round figure, there's a reaction. They say, okay, price will move from this level to this level, then it will react. Then from this level to the next level, then it will react. Wow. You saw the daily candle when you were doing your back testing. Perfect. Thank you very much, brother. So when price gets to those psychological levels, those institution banks will always want price to react from those levels, because those are the zones where they place their orders, where they place heavy orders. So that's why we call them psychological levels, key levels, powerful levels with high liquidity. So price swept off the liquidity and tapped on our key level. It did not tap on the exact level, but something happened. It tapped around the box, the zone, the same way we've drawn this box. That's how there was supposed to be a box here. So price doesn't just react randomly. Like my brother is saying here, price reacts at round or on round figures, around round level, round figures. Yes, something like that. So price swept out the liquidity below this powerful candlestick and created a powerful bullish engulfing. That's why yesterday we started looking for buy opportunities. Let's go to our yesterday's chart. I think it should be this. Nope. The one up. I have multiple charts because we work a lot, so that's it. So this is our entry for yesterday. Perfect. Perfect. This is our entry, our setup for yesterday. Yeah, I understand. I understand you perfectly, bro. And now understand why you had to place your stop loss all the way down, which is very, very cool. Personally, I love placing my stop loss, giving enough breathing space when swing trading. Okay. So now this is just a day trade, a day scalp, a day trade, sorry. That's why you see on my day trades, it's simple 20 pips, but on my swing trades, I don't care the number of pips. Okay. What I care most about is my risk tolerance. I calculate the lot size based on how much I'm planning to risk for that day. So, guys, this is a setup we took yesterday. It's still very valid, but I won't recommend you enter if price doesn't break and close above this key level 1.34 thousand, because all what you see here is still below a key level. So we cut the trade very early, but price decided to play over our emotions all through yesterday. We cut this trade this same time yesterday, this same time we're speaking, this same time we cut this trade, and now we are still here at our at our entry after making some massive profits. You see, this bullish engulfing told us it was about to rise, but like I said, what we saw on the daily, price can still decide to do whatever it wants to do. Price can decide to do whatever it wants to do. So at this point, we don't have any pressure with the market. We know we have to go up, but price might decide to pull back down before going up, which is very, very okay. You don't control price. What you control is your risk appetite. You know that, okay, my account is $1,000. You don't go risking $200 on that account. That's crazy. That's 20% of your account. You risk a maximum of 2-3% and you are free. You trade like a pro. You don't have pressure. No pressure, no unnecessary pressure, no fear. You just let things work out. So I was asking yesterday, who can recognize the pattern price has created here, down here? Is there anyone here who can tell me the exact pattern that price has created here? And let me just mark a box around the zone. Who knows? Let someone tell me in the comment section. We have traders here. Tell me, what pattern is this? What pattern is this? Perry Turtle, did anyone ever say you sound like I don't even know Kenwan. Like Elsa Kenwan. I don't know. But nice to have you here, man. Nice to have you here, Perry Turtle. Are you a new trader? Are you an expert? Just let me know in the comment section. Tell me where you're streaming from. Let's keep it going. And if you're not subscribed to the channel, show some love by subscribing. Let's keep it going. Oh, okay. You see head and shoulder. All right. One person is seeing head and shoulder. Okay, inverse head and shoulder. Everyone is saying inverse head and shoulder, inverse head and shoulder. Oh, my brother all the way from the Philippines. Nice to have you. Do not forget to subscribe. And if you want to connect with me, I always give opportunity for all my subscribers to relate with me. Let me just write my number on the screen. I don't know why I don't have it here. I'm going to shock you guys. This is not a head and shoulder. Just keep your answers coming. Six 562. That's the number. All right, guys. Keep your answers coming. Keep your answers coming. Let me widen the charts. Look at the pattern very well. Yes. I remember, yeah, one of my students, I don't know patterns. I don't trade them. I'm just guessing. Okay, yeah, I get the point. Yeah, for my students, when you were studying chart, when I was teaching you guys charts and candlestick patterns, I gave you an assignment to go do some research on chart patterns. So normally you should have known this. All right, this is what we call a cup and handle shoulder. So this is the cup and this is the handle. Can you guys see it? This is what we call cup and handle shoulder. So you buy from the handle and follow it up. So this is what we call a cup and handle pattern. Glory, why don't you know this? You studied patterns, like that's part of the curriculum. You have to study patterns. You need to understand so that you can use them as confluences because you trade pure price action. Say Jesus. So take the cup and drink water. We are about to drink water. Hope you are in. Hope you are still holding your trade since yesterday. So this is a cup and handle pattern. Okay. This is the cup. You see, price is creating. Let me go to the 1 hour. 1 hour shows it better. You see, this is something round coming down. The candlesticks are creating a round cup. You see, round. Are you seeing that it's round? Now, it has taken out the high, the highest point where it started. Oh, sorry about your SL, baby girl. That's part of trading. So this is actually the cup. Now this is the handle. You see, the retest is the handle. So you buy from the neckline, because when price takes out the neckline of that cup, it comes back down to create the handle. So you buy from the handle. So I believe you now, you guys now understand the pattern. Yeah, I believe you guys are learning a lot from this channel, and we're going to be dropping it back to back. We're going to be dropping it back to back. Baby girl, everybody is encouraging you. Okay, sorry for the stop loss. Sorry for the stop loss. You're going to do better next time. But why did you not maintain the stop loss? 20 pip stop loss. How did you get stopped out? It means you entered maybe late or too early. So this is what we see and have on GBP USD. Okay, any questions about GBP USD? Would you guys want us to break it down again, to go back all the way to maybe a higher time frame, back to one daily, because we already touched daily, but maybe some people were not around. So if you are not there and you want us to go back to the daily, just let me know before we maybe touch another pair. We look at GBP AUD that hit our stop. Woo, guys, this has been the longest before I got fully profitable. So since we hit an SL on GBP AUD yesterday, my brother all the way from Australia is, I don't know if you're 100% okay or you want us to go back 100%. Just let me know if we can move on or you're 100% okay. So guys, Glory, please can you drop the link in the channel in this thing, the link of the WhatsApp link here. Can you drop it, the link to the masterclass? So we have a powerful class coming up on. Drop it on the comment section, and let me see if I can pin it. We have a powerful masterclass coming up on Sunday. Yes, I think it's on Sunday. Sunday, the 24th of May. In Australia, that should be Monday. If I'm not mistaken, that should be Monday. It will be at 8 p.m. to 10 p.m. It's going to be a 2 hours intense studies. For those who want to take trading serious, that will be very, very important and interesting. It's going to help them a lot. So, Gloria, are you there? Please drop the WhatsApp, the link to the WhatsApp, to the FelloF free Forex Masterclass. I shared it in the group this morning. And for all those joining us for the very first time, show some love, okay? Subscribe to the channel. Tell us in the comment section exactly what or where you're streaming from. Are you a beginner Forex trader? This is the best channel for you. This is the place where you catapult your trading from completely zero to profitability for free. You don't pay a dime to watch my YouTube channel, okay? I have videos to guide you through your journey. Like, if you don't even know anything about trading, I give you the basics. Like, there are videos here, okay? It's not like I'm still coming to give you. No, they're already there. So you just subscribe to the channel, you start watching back to back. And in case you have any challenge, you drop it in the comment section. And we have live streams like this to actually make it easy for you. You can ask your questions during our live streams, and I'm always here to answer, okay? I don't actually reject, I don't say no to questions. I answer all your questions, even if they are out of topic, out of the current topic we're talking about. But if it's related to trading, we talk about it. But don't forget, don't ask me ICT questions. I don't trade ICT. I've studied that, but I don't trade it. So if you come asking me fair value gaps, order blocks, breaker block, I'll simply tell you I trade price action, and I'll tell you exactly what I do. So yeah, apart from that, guys, I break it down. Even trading psychology, we work on it, because so many people are suffering in the markets, not because they don't have a strategy or not because they don't know how to trade, but simply because they don't understand themselves. You know, trading is not just about the charts, because understanding the charts, you can do that in 3 weeks, you can do that in 2 months, you can do that in 1 month, 5 months, 6 months. But after that, you also need to understand yourself, because trading is more about you. It's more about you than the market. Yeah. We're brought up in environments that don't actually encourage freedom. Okay? They give you things to believe in. They give you systems and make you understand that that's the only way, or that's the best way. But most of those who come into trading are people who are living the systems to get to freedom. They want to find freedom. They want a space where you have the right to do what you want. And trading is actually that space. Trading is the perfect space for that. In trading, there are no rules. The markets are open 24/7. Even though you can't trade on weekends, you can't trade forex pairs on weekends. But the foreign exchange is open. Like, things are being done over the weekend. That's why there are times you wake up, you left price at 1.35,000, and now you made price at 1.34,000, made price at 1.36,000. Simply because over the weekend, activities were being carried out. The economy did not die. The economy did not die over the weekend. People were still doing international transactions. People were doing transactions in their respective nations. And that affects the foreign exchange. That affects the price of their currency. So the forex market is open always. But now, you are the one who decides when to get in. The market will not tell you it's time to get out. You are the one who decides when to get out. That's why even over weekend, you can hold your trades. You are the one who decides when to get out. The only thing that can get you out if you don't choose to get out is when your funds are finished. When you are done wasting your money. At that point, you have nothing to do in the market, so the market will automatically kick you out. But the market will still keep going. So that's the market we are in. That's the space you are in right now, the forex space, where there is freedom. Not only forex, trading space, where there is freedom. You do whatever you want to do and how you want to do. So the rules you have are rules that you make. You are the only one who can make rules for yourself in this space. There are no fixed rules. No fixed rules. You make your own rules. That's why you see, I always say, forex is not the best place to start when you are already financially, when you already have so much money. Because it's easy for you to lose all the money in forex if you don't have discipline. If you don't have discipline. So, like I said, let's look at GBP AUD. This pair actually ate our money yesterday. Okay. This pair ate our money yesterday. And it's still respecting what we anticipated. Remember, we're hoping that price should pull back into this box. Let me take out the main box. Good. We're expecting that price should pull back into this box and give us a sell. What's happening? You see, this is the yesterday's candlestick pulled deep and gave us a week, and now we're having another week. And what happened? That's why I keep telling you guys about key levels and mid levels. They are very, very important. Where did price react from? It did not just react randomly. I told you if we miss this key level, we are targeting the next key level. And where's the key level? This is it. You see where price reacted? On a key level. You don't play with this. It works on every pair, on our pairs. You just need to understand your pairs. You need to understand your pairs. That's all. Understand your pairs. Once you understand the key levels on your pair, you mark them out. Yeah, someone will say you are a bitch, or you are messing up, or I don't know how to put it. But guys, mark it out. Let your chart have your zones, because you are the one trading. You are not. I'm not marking these things for fancy. I'm not marking it to prove a point. I'm not marking these things to let you know that I'm a guru. No, I'm not a guru. I simply mark these things out because I might not spot it immediately, but once these things are there, these lines are on my chart. When I come around, I say, hey, price is at this level, so I should start looking for a confirmation to take action. Price already moved about 50 pips away from the entry, and this morning it might come down and give us 100 pips. That's already so much money. That's so much money. So imagine we got stopped out yesterday. If we now said, okay, now that we've been stopped out, let's now wait for price on the next key level and still maintain our very good stop loss level, because GBP AUD is the pair I don't play with my stop loss, because the pair actually moves. It's very volatile. Do your research, you realize how volatile GBP AUD is. One of the most volatile forex pairs. So if I'm targeting this key level 1.35,000 down here, that will be a 1:7, giving me 400 pips or 389 pips, 87 pips. Okay. Now we are already close to 50 pips. So if price 100 pips, sorry, because we are more than 50 pips already from the entry. Now you respect the highs, because yesterday we saw a little box on the 4 hours. Let me bring it down to the 4 hours. Good. This was the little box. If you notice, every pair has its way I trade. I don't trade all pairs the same way. You see, I love marking out boxes on GBP AUD. Historic data. If you are that kind of trader who actually backtest, you are that kind of trader who journal your trades, you will not suffer, because history always repeats in the market. Like everything that happened, almost everything that happened in the past, keep repeating itself. Okay, it keep repeating itself over and over and over and over and over and over again. So if you just understand that, okay, when you have a box like this, price will pull in and give you action. You see, price moved into our box yesterday, okay, and gave us action. You see, when price tapped into the box, what happened? Price switched out, and the next candle was a red candle. And we had so much confidence that, oh, we're going to make money. I was like, whoa, massive, man. I was like, oh, massive. And what happened? Price decided to say, no, we won't respect this zone. I remember yesterday on a live stream, this same time, I told you guys, if price doesn't respect this key level, it will definitely target the next key level, which is all the way into this other box up here. And what happened? It went there. So for those trading 1:2, simple. Your take profit will be around here. Okay. And if price pulls this level, you take your simple 1:2, you've made money. Greed should not let you hold trades longer than you are supposed to, especially if you're not a swing trader. If you're not the one who, sorry, you've doubled your risk. What I used to do in the market, get out. You've made your money. Go home. Take it and relax. Take it and relax. Sorry for ranting, guys. I just feel as, there are days like that. So this is what we see on GBP AUD. Okay. So on the daily, on the 4 hours, you see there is something creating.